Hi, what you see over here is the Ethereum to US dollar chart with two moving averages, the 23-day moving average and the 39-day moving average. And we can see that the price already crossed the 23-day moving average and is on the way to potentially break the 39-day. So why is this significant? Because historically speaking, the 23-day moving average and the 39-day moving average have been, when you backtest a trading strategy based on those averages, the most significant moving averages. In other words, they have performed the best. So if you hold Ethereum whenever the price is above the 23-day moving average and you sell it whenever it's below the 23-day moving average, you would have gained over time 166% per annum return. Versus if you just buy and hold, you would have gotten only 56% per annum. And also your maximum drawdown from the top to the bottom of your portfolio would have been only 47% versus buying and holding where you would have lost 90%. So this is the backtesting result. In purple, you see the moving average, the 23-day moving average. In white, you see the price of Ethereum. And in gray, you see our portfolio line. So we would always be in the market whenever the price is above the moving average. And we would be completely outside of the market. We would be in cash whenever the price is below the moving average. And when you backtest this strategy, you find out that the 23-day moving average as well as the 39-day moving average perform comparatively very well. So this is the result of the 23-day moving average. So we are better in the end in terms of performance compared to just buying and holding Ethereum. And this is the 39-day moving average. So pretty similar returns. So when you look at Ethereum, you should also look at those two moving averages, and when the price falls below the 23 and the 39-day moving average, this is potentially a bad sign. And if you just look right now at the price, we've already crossed the 23-day moving average. So just wait the price to drop below, say, $2,950, something like this. We are potentially in a situation where we might not see, at least short term, a lot of price gains in Ethereum. Now, if you just look at the price historically in US dollars, Ethereum, where are our resistance lines? Where are our support lines? We do see that we've fallen quite a bit from the all-time high already, around 27-ish%, but we've got way more room to fall. In fact, we can easily see another 33% drop or maybe even a 50% drop. So your potential reward versus potential risk doesn't look too favorable right now for Ethereum. I'm not saying that we will drop that far, but just looking at risk versus reward, I personally would not buy the dip right now, just because we don't have a lot of support right now. We don't have a lot of places where we could see a potential bounce. Now let's look at Ethereum versus Bitcoin. So how is Ethereum historically valued against Bitcoin? Do we see more potential growth here? So this is a historical chart since inception of Ethereum to today. And we see here that the top of Ethereum valuation versus Bitcoin was in June 2017. And we also had a pretty high level in January 2018. Now, January 2018, that might ring a bell because in the previous cycle, that was the market cycle top for Bitcoin. So we peaked in December 2017, then basically fell all the way down and got our drop of over 80% in Bitcoin. Now, we are currently not as high as in January 2018, but we are getting close to it, right? So if we compare how much more room do we have to grow until we get to that level, we look at a gain of Ethereum versus Bitcoin of around 35-38%, something in that range. So again, if you look at reward versus potential risk, 50% loss, maybe even 77% loss, it doesn't look too favorable now to go very heavily into Ethereum. Now, the sentiment in the crypto market has shifted quite a bit, right? We have lost quite a bit of momentum. So even the recent all-time highs, they haven't been that impressive. So from one all-time high to the other, it was 7%. From this all-time high to this one, it was around 4%. So we haven't really gotten into price discovery mode after reaching a new all-time high. So normally what would happen is when we break a new all-time high, we would jump up and get a really significant gain. This is not what happened recently. And now with this sell-off over here, not being able to reach a new all-time high and this big drop after Musk isn't supporting Bitcoin that much anymore, sentiment is very bearish. We do see, however, a short-term support over here, right? We can draw this horizontal line. We had a top over here. This could potentially act as support now during the sell-off, but I wouldn't bet on this. When sentiment is negative and momentum is not on our side, I personally prefer not to catch the falling knife. I personally prefer to buy when the market has completely capitulated, or alternatively, when momentum is very positive. But these areas in between where we have just come out of a bull market and we retrace more than we usually do, I don't like those situations. And so given that overall sentiment is bad, and given that Ethereum versus Bitcoin is valued comparatively high at a similar level where it was valued when the big crash happened, I personally think it's a better idea to de-risk and at least have a position that is small enough that you wouldn't lose sleep over losing potentially 30, 40, 50%. So right now I think you must feel comfortable with your position to go down 50%. If you are invested that heavily that you couldn't digest such a drop, you're exposing yourself to potentially quite a lot of drama. So don't sell it all. Have potential exposure in case this is all wrong. I might be wrong. Nobody knows where it really goes. But be prepared if times turn bad and we really face another crypto winter. If you enjoyed this content, please give this video a like so the channel can grow and YouTube shows this to a new audience. And if you haven't yet, feel free to subscribe as well. See you next time. Bye bye.